Imagine a cryptocurrency that fell more than 97% and then skyrocketed more than 2,500%. It's not a meme coin. It's not an unknown project. It's Solana, one of the fastest, cheapest, and most controversial networks in the entire crypto ecosystem. And here's what's most surprising. Millions of people talk about Solana, but almost no one understands why it exists, how it works, what problems it solves, and what risks it hides. Most people only see the price, the charts, and easy predictions. But that doesn't make you money. It makes you dependent on luck. In this video, we're going straight to what matters. You're going to understand what Solana really is, why its technology is so different, what's happening inside its ecosystem, and most importantly, whether it makes sense to invest in it right now. If you want to stop gambling and start investing with criteria, this might be the video that changes how you see Solana forever. But first, I have an important warning for you. Don't believe comments here indicating profiles of cryptocurrency experts who helped you make money. This could be a scam. Subscribe to the channel, study, and make your own way, because in the crypto world, any mistake is irreversible. Before you make any decision about Solana, you need to understand something that almost no one explains well. Solana is not just a coin. Solana is a network, a complete infrastructure designed so that applications, services, and entire markets function within it without intermediaries. When someone says, "I bought Solana," they actually bought Sol, the native token of the network. And here, many people get confused. Think of this analogy. Solana is the highway, Sol is the car, and also the toll. Every transaction within the network, buying an NFT, making a swap on a decentralized exchange, playing a game, moving money, interacting with a smart contract, requires paying a fee in SOL. It's minimal, almost symbolic, but it's enough to keep the network alive and functioning without depending on banks, companies, or governments. And that completely changes how you analyze this project, because when you invest in Sol, you're not just buying a token, you're participating in the growth of an entire network that can increase its use, its traffic, its adoption, and with that, its value. Solana was created in 2017 by Anatoly Yakovenko, a former Qualcomm engineer, with an ambitious mission: to build a blockchain capable of processing tens of thousands of transactions per second with ridiculous fees and an efficiency that no other Layer 1 network had achieved. But beyond speed, Solana was born to be an ecosystem. Within it, financial applications, games, exchanges, NFT marketplaces, and tools are being developed that compete directly with what platforms like Binance do today, or even traditional networks like Ethereum. And here comes a crucial idea for your perspective as an investor. The more projects built on Solana, the more demand there will be for us all, and the greater the growth potential of the token. Now that you've understood what Solana is, let's move to the point that attracts the most attention. How is it possible that this network is so fast and so cheap? To understand this, imagine the following scenario. Thousands of people performing transactions at the same time, playing, buying NFTs, moving money, operating in DeFi, all in fractions of a second. On many blockchains, this simply collapses the system. On Solana, it doesn't. Why? Solana combines two consensus mechanisms that completely change how a blockchain works. Proof of stake, PoS. Network validators lock up Sol as collateral and confirm transactions. The larger the stake, the greater the responsibility and the greater the reward. This model reduces costs and increases efficiency, but by itself wouldn't explain Solana's absurd speed. The great innovation is here. Proof of history, PoH. Imagine a cryptographic clock integrated into the blockchain. Instead of all nodes eternally debating which transaction happened first, Solana creates a verifiable timeline where each action receives a mathematical timestamp. This reduces conversations between validators, eliminates delays, and allows transactions to be processed in parallel. Result: Bitcoin processes 7 transactions per second. Ethereum on the base layer processes 15 to 30 transactions per second. Solana processes up to 65,000 transactions per second with a cost of less than 1 cent. And here comes something that's going to change how you see this market. Solana is not a blockchain made for old computers. It was built assuming that validators will use powerful machines with lots of memory and high performance. This increases efficiency, but also creates consequences we'll discuss later. Additionally, Solana uses various optimization modules, parallel processing, efficient contract execution, intelligent storage, all aimed at supporting applications that demand high volume. And that's why so many developers, traders, and even giant projects have migrated to Solana. The user experience simply works. Fast transactions, low fees, near instant confirmations. But here, you must be very careful. All this speed has a hidden price, a level of centralization and fragility that doesn't exist in networks like Bitcoin. Before we dive into that dark side, let's see if all this technology is actually being used, because a blockchain is only worth what its ecosystem can build. A fast network is useless if it's empty. And this is where Solana starts to show why it attracted so much attention so quickly. Today, within Solana, there's already a complete ecosystem with real applications, active users, and billions of dollars moving every day. This isn't theory, it's use. Within the network, we find decentralized exchanges, DX. Platforms like Radium and Jupiter allow you to make swaps without depending on a company like Binance. Here, you control your funds. No frozen accounts, no schedules, no permissions. NFT marketplaces. Magic Eden became one of the largest NFT marketplaces outside of Ethereum. Entire collections emerged, made history, fell, rose, all while paying commissions of just cents. Games and metaverses. Projects that need thousands of transactions per minute, something impossible on slow networks, find in Solana the performance they need to function without lag and without absurd costs. DeFi tools, lending, farming, yield, advanced trading, aggregators, all this exists within Solana, without intermediaries and completely programmed into smart contracts. Social applications and Web3 experiments, decentralized social networks, smart wallets, and projects that seek to replace traditional centralized services. And here a key question arises. How does an ordinary user get into all this? It's simpler than it seems. You download a wallet compatible with Solana, like Phantom or Solfar. These are browser extensions or mobile apps that create your private keys and seed phrase. That's yours, only yours. No bank can freeze it. Buy Sol on a centralized exchange, Binance, Kraken, Coinbase, or whichever one you operate on in your country, and send it to your Solana wallet. With it in your wallet, you can now pay fees within the network, make swaps on DEX, buy NFTs, interact with games and dApps, delegate your SOL for staking, and generate passive rewards. And here comes something very important for any smart investor. That's why, when you analyze a blockchain network, you can't look only at its price. You have to look at who uses it, what's being built, and how much real activity is happening inside. Now that you've clearly seen what's working inside Solana, let's put it in context. How does it compare with Bitcoin and Ethereum, the two giants that dominate this market? To understand where Solana fits in the market, you have to compare it with the two giants that dominate the crypto world, Bitcoin and Ethereum. Because Solana wasn't born alone, it was born to compete. First, Bitcoin. Bitcoin doesn't claim to be fast, doesn't claim to be cheap, doesn't claim to process thousands of transactions per second. Bitcoin is decentralized digital money, a store of value designed to be incorruptible, censorship-resistant, and nearly impossible to stop. It's the safest asset in the crypto market, but also the least flexible for complex applications. We already have several videos here on the channel explaining Bitcoin. I hope you already know where to safely study Bitcoin, right? Then Ethereum. Ethereum introduced smart contracts, created the foundation for DeFi, NFTs, DAOs, and practically everything we today understand as Web3. But its base layer is limited. High fees, slow processing, frequent congestion. And then Solana appears. Solana wants to be the blockchain that Ethereum is, but without sacrificing speed and costs. That's why many people call Solana the Ethereum killer. Direct comparison. Speed. Solana processes thousands of times more transactions per second than Ethereum. Fees. On Solana, you pay cents. On Ethereum, you can pay $5, $10, or even $50 during congestion hours. Experience. Solana feels like a normal app. Ethereum during high usage feels like an airport on strike. But here comes something extremely important. Solana doesn't compete with Bitcoin. Those are completely different missions. Bitcoin is maximum security. Solana is extreme performance. Solana's real competition is with other smart contract platforms like Ethereum, Avalanche, Aptos, Cardano, and many others that also seek to solve the scalability problem. In a future where millions of people use dApps every day to pay, invest, play, and buy, slow and expensive networks won't survive. Only the most efficient and scalable have a chance to dominate. Solana has strong arguments to compete: speed, price, user experience. But before you decide if that's enough for an investment, I'm going to show you the risk side that few people talk about. Solana is fast, cheap, and easy to use, but all of that has a hidden price, a level of centralization and fragility that doesn't exist in networks like Bitcoin. First, hardware requirements. To be a validator on Solana, a regular computer isn't enough. You need powerful machines with lots of memory and high-performance connection. The result? Very few people can operate full nodes, and when fewer people validate the network, more power concentrates in a few hands. At the time I'm recording this video, Solana's official website indicates 802 active nodes. Second, dependence on the Solana Foundation and large validators. On several occasions, DDoS attacks, network saturation, internal errors, Solana has suffered complete outages. The network stopped for hours, and to restart it required direct coordination between a small group of validators. That means a handful of entities can turn the network off and on. That's not real decentralization. Third, concentration of the SOL token. A significant portion of the initial supply ended up in the hands of insiders, the team, and investment funds. These actors have influence, decision-making power, and the ability to move the market. Does that mean Solana is bad? No. It means it's not what many people think. It's not the perfect network. It's a network with a clear trade-off: more speed and user experience in exchange for less decentralization and more technical risk. As an investor, you need to understand this balance before putting your money in. And with that, of course, now we can answer the final question. Is it worth investing in Solana? Let's start with the positive side. Solana has an ecosystem growing at an impressive speed. User experience is one of the best on the market. Low fees allow anyone, even with little capital, to participate in DeFi, NFTs, and games. And besides, staking offers rewards that can complement a long-term strategy. Now, the risk side. Solana is a young network that has already suffered several serious outages. Its architecture heavily depends on expensive hardware, which concentrates validators and decreases decentralization. The SOL token remains volatile, capable of rising thousands of times or falling more than 90%, and it competes in a sector where Ethereum, Avalanche, Aptos, and many other networks are also seeking the crown. So, what does all this mean for you? Solana is not an asset for someone who wants maximum security. That role still belongs to Bitcoin. But Solana can be a growth bet within the risky part of your portfolio. It's a project with high potential and high risk. If you decide to invest, do it with a clear thesis and with money you're willing to see fluctuate strongly without losing your calm. The important thing is that now you have the knowledge to make informed decisions, because whoever understands fundamentals doesn't depend on luck. If this video helped you see Solana with different eyes, smash that like button. Subscribe to the channel and tell me in the comments. Do you want us to analyze Avalanche, Cardano, or Aptos in the next video? See you in the next one. And remember, in this market, information is your greatest advantage.